Hello and welcome, everyone. This is Tom Bowley, Chief Market Strategist at earningsbeats.com. And this is Trading Places Live. It's Tuesday, June 27th, 2023. And I'm pre-recording this Trading Places Live for a bit later this morning. Let's see. Currently, we have futures mixed. Dow futures are down 56. S&P 500 futures are up 2. NASDAQ futures up 45. So we're seeing a little bit of rotation this morning back toward the NASDAQ. We finished weak, though, and we'll go over those numbers in just a minute. But NASDAQ did not have a very good day yesterday. It was the worst of our major indices. This morning, we got crude oil futures down, or crude oil prices down $1.50, back below $68 a barrel. And the U.S. 10-year Treasury yield, 3.72%, relatively flat from where we finished yesterday. Today's going to be a little different show because I've been away. I actually had a family reunion over the weekend. So I was traveling on Friday, came back traveling yesterday, and then spent the weekend with family playing golf and enjoying some time together. We do this every year. We've been doing a family golf tournament. We had a little bit of a 3 or 4 year period where we didn't do it, but otherwise we've done it every year since 1990. So it's been something, it's family tradition. Love getting together with family. And so I kind of blocked the market out for a few days. I mean, I kind of watched it on my phone a little bit on Friday, a little bit yesterday. But other than that, I have not been on my computer in 5 days, which is just crazy. But so I'm going to kind of walk through things the way I would walk through them when I haven't looked at anything for a few days, because that's exactly where I'm at. I know a little bit about the major indices, but I've really not followed a whole lot. So going to be a little unique look, I think, today with the show. As far as the agenda for today, I really don't have one, but we'll do the daily market recap, or at least a form of it. Talking technically, chart of the day, Max Pain analysis. I figured, we looked at Max Pain a couple weeks ago. Didn't really work for a few days, maybe even a week. But then I tell you what we've seen over the course of the last week, maybe week to 10 days. We've seen some selling. We've seen some prices coming back down, overbought conditions. I think Max Pain probably had something to do with it. But I think it's timely, and I think it was good. I think the market needed it. Anyway, we'll be looking at all of that. I'll give you a state of the market. So right before I left last week, I gave our members, normally I do a daily market report every day that the market's open, but last Wednesday and Thursday, I did a 2-part series, daily or state of the market, where I just really went through almost everything and just wanted to give everybody a heads up as to what I thought about the market, the various areas of the market, different asset classes, and very, very lengthy report each day, much more than we normally do for a daily market report. Tons of charts, key support levels, various intermarket relationships, and all of that. So hopefully our members enjoyed kind of where I see things standing. I also want to mention, run over to Earnings Beats, because if you would like to attend a free event, and I'm going to be talking, it's not exactly state of the market, but I am going to give a mid-year update, kind of what I've seen through the first half of the year and kind of where I think things could be going. And so this is our bullseye forecast mid-year update. And if you click on this, you can sign up. So right there, check it out. It's going to be on Thursday, July 6th, 7 p.m. Thursday, July 6th, 7 p.m. So that's next Thursday, not this week, but next week. And it is a little later start time, 7 p.m. Want to make sure everybody, those of you on the West Coast, hopefully that'll help a little bit there. Of course, we have people who follow us from all over the globe. So I don't know, maybe that time is better for you. Maybe it's worse. But either way, if you're registered for the event and you can't attend, could be bad timing. You might have other plans, whatever. We will send out the recording, and you can view the recording anytime you want. It'll be time-stamped, fairly detailed. So if there's areas that you'd like to check out, hopefully we'll make that a lot easier for you. But go over to earningsbeats.com, click on that link I just showed you. It'll bring you to this page, and then make sure you get signed up for it. We'd love to have you. Also, we do have a free handout. Anybody who's registered for this will get a download, a free copy of Money Flows and How It Impacts the Stock Market. I'll tell you this, it might be a free handout, but it's worth a lot. This is a lot of my personal research that I've done into the stock market over the past 75 years, almost 75 years, since 1950 on the S&P 500. And if you think that the market is just this random walk through time and market just kind of goes up, down, whatever way it feels, and there's no real rhyme or reason to it, I'd suggest that you consider otherwise. Sign up for this event and get your free copy of Money Flows. I think it'll be an eye-opener for you. All right. So let's go ahead and start. Daily market recap. I don't have my the little CandleGlance chart set up. So what I thought I would do is just show you how you can set up CandleGlance. So for instance, well, let's just pull up Tesla there. I'll go into so this is what I normally do. I normally have this chart list, major market indices set up. And I've got, would have been the last show I did, the different groups that I have here that I wanted to forecast. So if you go over, or wanted to talk about, so if you go to, say, View All, and you hit CandleGlance, this is how I normally start the show with these 12 charts. It used to be 10, now I've upgraded, I guess, to 12. And so I do essentially the major indices across the top. So I've got the Dow, S&P, NASDAQ 100, mid cap, small caps, and I've added the transportation index. Transports are really important, and you can see transports have actually held up really well while the rest of the market's been pulling back. This is the rotation that I talked about from I don't know, maybe a couple weeks ago, that it was inevitable. We were going to start seeing some selling out of some of those large cap growth names. They'd just gone straight up. They're not going to go up every single day forever. I do think that we were in a melt up phase for many of those stocks. But now what we're seeing is the NASDAQ 100 pulling back, S&P pulling back, Dow pulling back, but money rotating over into the transports. Transports sitting near a high. This is great. This is great action. Instead of the money simply leaving the market, we're seeing it rotate into a couple key areas, which is nice. Transports being one of them. This was a group that underperformed for a while. And because it underperformed for a while, and we saw industrials underperforming for a while, everybody was all bent out of shape. Oh my gosh, breath is awful. Well, if you recall back at the end of 2022, we had those groups, transports and industrials, flying in the fourth quarter. And remember, it was the large cap growth stocks that weren't doing anything. And everyone's like, oh my gosh, how can the market go higher? Growth stocks aren't performing well. Then the growth stocks take off and everyone's like, well, no. Can't go any higher because breadth, it's too narrow in advance. Everybody always is pessimistic. That's what drives me crazy. And that's why I cannot watch the media, any form of it. And you might say, well, they talk about bullish stories and bullish things. I know they do. But if you want clicks, listen, I write articles over at StockCharts. I can tell you that if I write something that says we have a top in place or watch out for bearish action ahead, I will get 3, 4, maybe 5 times as many clicks on my articles as if I write rotation is bullish. But I don't care about the clicks because it doesn't do anything for me. Well, I guess I shouldn't say that. It's, obviously the more people click, the more people find out about me and earnings beats. But I don't use it that way. I will write bearish articles if I'm bearish. But I'm not going to write bearish articles just to get the clicks. If I'm bullish, I'm going to write bullish things. I don't care about the clicks. All of that will fall into place. If I'm objective and I give you what I'm thinking, whether it's bullish or bearish, I think the majority of folks are going to appreciate that. Rather than this gloom and doom, some people make their entire career off of being Mr. Doom and Gloom or Miss Doom and Gloom. I mean, Peter Schiff, I could care less about ever watching anything he ever does because he's always so bearish about everything. It's like you can't even look at the market objectively. You have these blinders on. My gosh, just look at the stock market over the last 75 years, 100 years. Look at the last 10 years. Look at the last 30 years. Pick just about any time you want. The market goes up from left to right. I don't know how people make a career out of being so bearish. But anyway, I like the fact that the market is rotating right now. I like the fact that industrials made a breakout to an all-time high. Pulled back. They're well above the 20-day, still sitting at 104. The all-time high was over 105. They're still right up there. One of the reasons is because of transports. Transports are performing well. I can tell you this, when the transports get moving, there is a very, very positive correlation between the S&P 500 moving higher as well. So when the transports get going, you're not going to find me very bearish. I mean, I love the growth stocks. Don't get me wrong. You know, when the economy's strengthening, you're going to see those growth stocks outperform. But for a while, transports lagged. So now that the market's pulling back, what I don't want to see is transports breaking down. I want to see the money rotate. That's what we're seeing. Transports moving up during the month of June. They've had a great June. All right. Anyway, let me show you real quick how I do this. So let's just go over, I'll show you how you can do the CandleGlance. So if I just pull up, let's just pull up the XLI. Now, the first thing you have to do is set up the chart the way you want the CandleGlance chart to look. So if you look back here, what I have is the PPO, price action, and the AD line. I've got the moving averages on here. I've got volume, and I've got a 6-month chart. That's how I've got it set up. So anytime I hit CandleGlance, this is the style that's going to come up. Now, the way you set that style is you go over here and just set a chart, however you want to put it in CandleGlance form. And I'll do it a little different just to kind of show you how you can do things differently. But let's say, I don't know, let's say we want to do an hourly chart. At your CandleGlance, you're more of a day trader. You want to see what's going on an hourly basis. And let's just go 2 months. And I don't know, MACD, PPO interchangeable, but let's say MACD is your thing. Put the MACD in there. How about Chaikin money flow? I got a lot of folks talk about the Chaikin money flow. I haven't really followed it that closely, but I could see where that would be a meaningful indicator. So let's say this is how you want to set yours up. And let's say you don't even want a 50, you just want a 20. And maybe you want a 20, and maybe you want another exponential moving average on here. Maybe 10. So you're going to have a 20-hour and a 10-hour. Maybe you're really momentum trader and you're trying to follow that short-term momentum to the upside, whatever. Got the volume separated, got all of this. Okay. Update. And so there's my new chart. And this is what I want for my CandleGlance. So I already have a CandleGlance set up. But if you go in here, you can just type in whatever you want this to be. But if you already have a CandleGlance established, when I start to type in CandleGlance, you're going to see right here, it's already set up for me. I just click on that. And then it's asking me, do I want to replace the one I have? Or is this a mistake and I just want to cancel and go back to the old one? No, I want to replace. I want to change my CandleGlance setup. So I do that, hit the replace. And now what will happen is if I pull up, let's go back to that Tesla, and then we'll get into our market indices. So I've still got the same ones, still got the same 12 set up in this chart list. But this time, when I hit CandleGlance, it's going to be the hourly chart for 2 months. So let's hit CandleGlance, see what we got. Now, here's your 2-month chart. There's your MACD. Here's your Chaikin money flow. And here are your moving averages, very close together. Because again, I'm doing a 20-hour and a 10-hour. So they're going to be pretty much following that trend pretty closely. And this might not be the right settings. I just wanted to show you how you can set this up. So just pick a format, a style, whatever you want, and then hit that plus button. So when you set it up, you just go in here, whatever that is, type it in. It could be anything. It could just be, okay, this is my 1 year default. So you type in 1 year default. And what it'll do is if you add new, it'll create a button. And then you can organize your buttons and you can go back and you can just pull up this 1 year default chart whenever you want. You don't have to go back in every time, you're looking at Tesla. Instead of having to set the chart up down here every time how you want it, it's already set up as a chart style button. That's a great feature at StockCharts if you haven't used it. I mean, you can see how many buttons I have. I have a 10-minute, 5-day. So I can look at Tesla real quick. There's my 10-minute, 5-day, obviously downtrending. I've got a 1 month hourly set up. So here you go. Had a little bit of a negative divergence here. As you can see, the PPO started rolling over right in here. We made one final high and then back down we go. Now we're trending down. Maybe watch this gap support level down around 235. Then we've got a daily chart. There's my daily chart on Tesla. And then I got a weekly chart, monthly chart. I don't have to go down to the bottom and change the settings. It's just a huge time saver. If it was a dividend paying stock, I've got a dividend chart. Tesla doesn't pay dividends, so it's not really a thing. This I like to use sometimes, just earnings relative strength. So here's my Tesla chart. And then down here's Tesla relative to the autos. So not only is it going up, but it's also leading the automotive group. Next up, I've got, that's for a different thing. Strong ETF, don't need that. Relative chart on Tesla. So here's my AD line. Here's the price chart. Here's Tesla versus autos versus the S&P 500. Anyway, go right down the list. Here's the 10-year treasury look that I always put on, which I'm going to go to right now. But here's that style button. I always like to set my 10-year treasury yield up like this. I like to have the 10-year treasury yield right here, 1 year. And then down below, I like to look at areas that are a little bit more economically sensitive, financials, industrials. And when yields go up, these two groups tend to go up. When yields go down, these two groups tend to go down. And so it was working pretty well for a while. And then got a little choppy, pulled back. But it's been a little odd recently, the last 2 or 3 months. We've been seeing yields go up and we've been seeing financials go down. Industrials are starting to come back up again with the yields. So that's been good. We'll see if that XLI, now this is a relative chart. I said the XLI hit an all-time high. You can see on a relative basis, it hasn't hit an all-time high, but on an absolute basis, it has. All right, let's move on. I don't even know what the heck we were going to talk about today. So let's, let me see. Well, let's take a look at, let's go back in here for a second. And we'll pull up Econo Day because I usually use mostly free websites. And Econo Day is where I normally get my economic data. I hadn't pulled that up yet. Oh, that's global. I don't want the global, sorry. Hit this view full calendar on the US announcements. And then for Tuesday, it gives me the reports and the times. So I can just quickly look and see, all right, today we got durable goods, Case-Shiller Home Price Index, FHFA House Price Index, consumer confidence, new home sales. A lot of data coming out today. Not so much tomorrow. We do have Jerome Powell speaking. Wonderful. A little sarcasm there. GDP on Thursday, jobless claims, pending home sales. And then you got a bunch coming out on Friday as well. Personal income, personal spending, the Chicago PMI, consumer sentiment. So we got a lot of information coming out. The market's going to have to try to digest this week. Also, about a week or 10 days ago, I talked about the market being very overbought and the fact we were going into a historical bearish period. Well, that bearish period is coming to an end early this week. Actually, I think it might end today or maybe it ended yesterday. But we're about to move into a much, much more bullish period historically. So the pullback, getting back to some key support areas near the 20-day moving average, maybe near some gap support levels. Those were all good things. I mean, the market needed a little bit of selling time to kind of unwind some of the overbought oscillators. We'll see what the market has. Not a whole lot of earnings coming out yet. Earnings will start back up in force in about 3 weeks. Until then, we got a few economic reports. We'll see what the market's going to trade off of its technicals, which mostly are pretty strong at this point. I think most technicians looking at the charts would say, hey, got a nice series of higher highs, higher lows. We broke the downtrend on the weekly chart. Even on the long-term monthly chart, the PPO, which went almost down to the zero line, turned right back up, pointing up again. So we got momentum on all time frames. I think the market looks great. And normally we get a pre-earnings run that begins right at about this time and runs through maybe 2.5 to 3 weeks into July, right around the 18th, I believe, 17th. So we'll see if the history holds up. But right now, market, I think, in a much better position than it was just a week, 10 days ago. All right, next up, talking technically, I tell you, let's just take a quick look at the S&P 500. So where do we stand right now? Well, we talked about this big volume day and the fact that we had reversed. That was partly option, well, probably more than just partly. Quad witching day is every third month, every third calendar month. That's when the volume really tends to explode. So we see it June, third Friday of June. We see third Friday of March, third Friday of December, third Friday of September. See how all those volume all line up pretty much. They're not the 4 most heavily traded volume days of the year, but they're pretty darn close to being the top 4. I think maybe this day right here at the end of May maybe fits in, but otherwise, those are 4 of the top 5 days. And you're going to see it again come September, third Friday in September. That's the way the market works. Quad witching creates a lot of volume, got a lot of traders getting out of certain positions, moving into new positions. And as a result, volume is always much, much heavier. But look at the price pullback that we've seen. So we got up near 4,450 and we've pulled back almost down to 4,300. This has been, I was saying maybe 4 or 5%. I think it was on the NASDAQ. I was looking at 4 or 5%. But anyway, this is back down to the 20. I was saying 4,300 down to possibly the 50-day, which would be 4,200. That would be the range. If you're into the market or, you sat out for a little bit, you're looking to get back in, I think the 20-day is a great spot. You could get in on the 20-day. If it breaks down below 4,200 on a close, you can get back out. You risk 2.5% to the downside. Not bad. Certainly not as bad as when it was at 4,450. Risking down to 4,200, that'd be 250 points, which would be 5 to 6%, a little different than 2% or 2.5%. Anyway, S&P looks good. I think it may have been the NASDAQ that I thought could pull back. Maybe it was NASDAQ 100. Yeah, I think on the NASDAQ 100, I had said maybe 14,500. Worst case, maybe down around 14,000. Well, we got down to 14,689 yesterday. I mean, we're getting pretty close considering we were up to 15,250. Now, at the most recent high, the PPO is at a new high. So normally I look for a 20-day reversal. In other words, a move back off the 20-day. And that's what I would be looking for here. All right. What else? I'm not ever going to get through everything I talked about at the open. I spent a lot of time on that CandleGlance. But let's see what else I had here. Chart of the day. So let's look at AMD. AMD was in the max pain. I talked about max pain. I was going to go over the analysis. This was one stock that I gave right back. I mean, this was the Tuesday before the Friday. So this is when it would have been when we met. And I told members AMD has max pain down at 101. Lot of in the money calls. There was $1 billion worth of in the money calls on AMD. And look at what happened to the stock. This is why you need to know about it. Max pain. And it wasn't so much that I would short AMD. It's just that if I wanted to go long, no way that I would go long there. There's too much in the money call premium, too much money on the table for market makers. just too risky. It doesn't mean you can't go higher. It's just, are you willing to take that risk? I would not be. Now it's filled the gaps down near the 50-day. Yeah, I would be a big fan of AMD right here. I think AMD is a great buy. I would say from here down to maybe 100. That's where we broke out from. But let's look, your target's up over 130. If you buy here, maybe buy again if it gets to 105 and put in a closing stop under 100, you don't really have a whole lot, maybe 5% of the downside, but you've got probably 20% of the upside. 4-to-1 reward to risk. I'll take that out all the time in the market. Anyway, that's AMD. Yeah, that's kind of, I mean, Max Payne kind of got started late. AMD started almost right on time, but we saw a lot of stocks that actually Max Payne didn't kick in until probably the early part of the following week. I mean, we saw a lot of the stocks just keep going up for the next few days after we had our Max Payne meeting. But then we have seen the market pull back. And again, it kind of fits with historical analysis. Didn't really talk about the state of the market, but I'll pull up the IWM because this was an area that I really liked, had the explosion. Talked to members and said, hey, up in this area, let's get out of the TNA, the leverage. Let's wait for a pullback, at least to the 20-day, which we've gotten. I'm actually in the TNA right now. I started it on the 20-day test, maybe just a little bit above, but I've been adding. And what I would watch for maybe to the downside is a close below maybe 177.5 to 178.5. I think that is really good support area. And you got the 50-day now coming up above the 177.50 area. So that, I think that would be, this is the time. This is when I like to try and start increasing my leverage. So when it goes up and I get out of leverage, I'll hold the IWM. But then when it pulls back, if I can make money triple on the way up and lose on just a regular ETF on the way down, that makes a lot of sense to me. So when it gets back down, this is the area where I would be thinking about getting back into the TNA, if not already in, and get, just take a little bit of the IWM. You're just trying to juice your returns. I wouldn't take my entire account and put it in the TNA. That's very, very risky and probably not appropriate for just about everybody listening to the show. But yeah, I mean, I think getting back into a piece of it makes a lot of sense right in here. All right, that's about it for me for today. It's a little different show. Hopefully you enjoyed it. Again, I'm kind of just getting settled back in, taking a look, try and probably upgrade or update some of our chart lists and all today, or start looking at doing that, trying to have that ready. We got a lot coming up over the next couple of weeks. Again, I just want to mention to everybody, if you go over to our home at earningsbeats.com, just scroll down right here, hit this bullseye forecast mid-year update. We do free events, really good, valuable free events once in a while throughout the year. Being a part of our Earnings Beats Digest gets you access to all of that, in addition, obviously, to being a paid member. But click on it and sign up. Make sure you're registered, and then come join us next Thursday at 7 p.m., July 6th. If you can't, we'll send you the recording, but you do have to be signed up. Check that out. Everybody have a great day. I'll be back tomorrow over at Earnings Beats for your next Trading Places Live. Have a great day, everybody. Happy trading.